Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 18th of April until the 22nd. Now before we dive into the webinar, one of the key highlights for this past week was Johnson & Johnson's surge after its positive earnings report, as well as Uber's rally after mask mandates were lifted for both riders and drivers in the US since COVID cases started falling. As always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment and trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So like we said, we'll be kicking things off with stocks, and by looking at Johnson & Johnson first and foremost. You can also see the chart in front of you. It's on the daily time frame, and you can see from the chart itself what we spoke about during the intro. Now, the earnings season of Q1 of 2022 is fully underway. So obviously, as the days and months go on, we'll obviously have more and more companies reporting their numbers. Johnson & Johnson happened to be one of the first ones to do so. So like we said, Johnson & Johnson surged because it beat its earnings per share estimates by more than 3.5%. Now, overall in the week, the stock price was up by almost 5%, and it also reached a new all-time high, which was $185.94. If we switch this on the weekly time frame and we zoom out, we can essentially see that Johnson & Johnson is trading at all-time highs. Of course, with regards to earnings, like we said, it beat the estimates by 3.5%, which for some people might not seem like a big deal, but we can see how essentially on the day that it reported its figures in the pre-market hours, it surged in the next couple of hours where it reached the all-time highs. So this is as far as Johnson & Johnson. The next stock that we talked about is going to be Uber. Now Uber surged by 6%. It's not going to be the same reason or a similar reason as to Johnson & Johnson, as it hasn't had its earnings report yet. But the reason it surged because on Tuesday it was announced that the company was lifting the mask mandates, both for its drivers as well as the riders, with the COVID cases falling in the US. We can see that it was potentially one of the reasons that triggered the surge, as it could potentially mean that more and more riders will want to use Uber since it currently has the no mask mandate. From reading the article, I think also Lyft, its main competitor, also did the same. But nevertheless, the case is that it might drive people to use Ubers and ride sharing a bit more, since they won't have to be wearing any masks, and since they're not mandatory anymore. So yeah, like we said, it surged by almost 6% on the day. We can see this from the candlestick here. It's pretty much, it traded right up towards the highs as well. Now, for those who want to keep this stock on their watch lists, they will be reporting their earnings figures on the 4th of May. So there's still a few more days to come, but it's going to be in 2 weeks' time. So for those who are keen to trade Uber, just bear in mind that the earnings report is going to be released on the 4th of May. On the month, if we switch on the monthly time frame, we can see that it's still down, but it did recover a little bit of that downside. Now it's only down by 5%. And if we do get a positive earnings report next month, it could stage a pretty healthy comeback with the beginning of next month. Now, next up, we're going to be moving on to Forex. Now, with regards to Forex, the highlight of the past week was yet again the US dollar against the safe haven currencies, namely the Japanese yen and the Swiss franc. Now, the US dollar Japanese yen, as you can see from the chart as well, is pretty self-explanatory what's happening. It rallied to a 20-year high, which put the pair on track for a 7 consecutive week gain. If we switch this on the weekly time frame, you'll be able to see exactly what I mean. So we have 3, 6, and the 7th week ongoing, where it's on track to post the 7th consecutive week gain. We can see it's still trading all the way towards the very highs as well, with no signs of weakness. And if we switch on the US dollar Swiss franc, we'll see that it's more or less a similar story. It's not exactly the same. We can see it's only three consecutive week gain, but nevertheless, it's still a pretty strong move of the US dollar against the Swiss franc. Now, one of the potential reasons for the rallies are the major differences when it comes to the monetary policies between the three economies. So on one hand, if we were to categorize them, we have the more aggressive one, which is the US, who also has the mission to control soaring inflation, which is currently sitting at 8.5%. So the way to do that is through an aggressive rate hike cycle, whereas the Bank of Japan, as well as the Swiss National Bank, have been keeping their interest rates extremely low and in fact negative as well. Now, if we look at the US dollar Japanese yen first, on a monthly time frame, we'll see that it has risen, the surge, it has risen, now it's pretty much all the way up to 6%. And it was more or less similar last month as well. So in a 2-month span, we can pretty much see more or less 10 to 12% gain, or 700 pips just for the month of April so far. And if we switch on to the US dollar Swiss franc, again, it's not quite as strong as the US dollar Japanese yen, but it's still up on the month by more than 3%, or 287 pips. Like we said, both the Bank of Japan as well as the Swiss National Bank are amongst the only world central banks which still have negative interest rates, with the interest rate of the Bank of Japan sitting at minus 0.1% and the one of the Swiss National Bank at minus 0.75%. Next up, we're going to be looking at some of the commodities, which is going to be oil and gold. Now, looking at both of them, they dropped sharply as we had the IMF, the International Monetary Fund, slashing its world growth forecasts. So it's basically an outlook, a report where they come in and calculate more or less the GDP growth rate that they're seeing for the world in general over the next few years. Now, the International Monetary Fund, they said that the global GDP will likely grow by about 3.6% in 2022. So to some people that may sound positive, but the thing is, this was downgraded by 0.8% for this current year, and 0.2% respectively for the next year. So as a result, we had oil prices, we can see on the day that the report came out, they dropped by almost 6%, or $6.40 on the day, and we can see they were pretty much close to trading back towards the $100 mark again. So we can see the past couple of days or even weeks, it's been essentially oscillating below the $100 mark and just above it. So it's still struggling a little bit for direction. So depending on what other reports we might get, we also have the ongoing development in Ukraine and Russia with regards to the conflict. Depending on the outcomes of those, we could see whether it's going to spring past the $100 mark and again towards the upside to retest the highs up here, which is 125, or whether it's going to look to trade lower back into the lows here, which is about the $90 mark. In any case, this is the range, the most recent range that has been formed. So these would be the first levels to be eyeing in case we get any breakouts. And if we look at gold, it was pretty much a similar story with regards to it dropping after the release of the report from the IMF. Gold, on the flip side, I mean, it did drop, but again, it wasn't as much as oil, as it only dropped by 1.4%, or $26.84. The key price point for gold is the $2,000 mark, which is the one that it rejected off of a couple of days ago, as we can see. A couple of days ago, as we can see here. And the range, you can see it's defined by the lows here. And we have the high, which was formed like again yesterday, a few days ago, during the week, all the way up here. Now this level, again, it's close to the $2,000 mark. The levels down here are pretty much the 1900. So both of them are round numbers, which can also act as psychological levels of support or resistance. And yep, there you have it as far as the look back and review for this week. Again, let's not forget that we have the earnings season again in full swing. So any stocks that you want to be having on your watch list, it will be worth keeping an eye on their earnings report, so as to gauge more or less what the impact is going to be on the actual stock prices. So I hope you enjoyed the video and you find it useful, and I'll catch you in the next one. Until then, trade safe.